It's that time of the year again where many of us will be receiving our bonuses very soon. Assuming that you even have a bonus. So, in this video, I'll be doing an updated video to share the 9 best places to park your money for the rest of 2023. Before I start, do join my Telegram group to discuss anything related to money or ask any questions that you may have. So, let's jump right in. First up, for those who have a monthly income, let us look at the best bank accounts to park your cash. For this, we can consider either the UOB One account or the OCBC 360 account. But I will only be focusing on the UOB One account since its criteria to earn the bonus interest is the easiest to fulfill. All you need to do is spend a minimum of $500 every month on an eligible UOB credit or debit card such as the UOB One card, UOB Ladies card, or the UOB Evo card. Then credit your salary of at least $1,600 into the account either via Gyro or PayNow, and tada! You'll be able to earn a minimum of 3.85% interest per annum all the way up to an effective interest rate of 5% if you can save up to $100,000. And in case you don't already know, even though it says that you have to credit your salary via Gyro, a simple trick that you can use is to make a transfer via PayNow or Fast, then select salary payment as the purpose of transfer, and ding, it will be counted as a salary transfer. So let's say if you can fulfill just these 2 simple criteria, and if you have 100k in your UOB One account, you will earn an annual interest of $5,002.50, which is actually not too bad, yeah? What's more, there are currently 4 promotions ongoing for the UOB One account. There's the online accounts opening promotion, but this is only limited to the first 200 customers per month, so we can forget about it. Then there's the UOB Salary Plus promotion, where you can earn up to $130 cash simply by paying your bills and crediting your salary and dividends with UOB. There's also the Christmas Savings promotion, where you can earn up to $1,500 guaranteed cash by depositing a minimum of 50k in incremental fresh funds in an eligible account. Not only that, you can also stand a chance to win exciting prizes such as flight tickets to Switzerland, the latest iPhone 15, or a Dyson hairdryer. Lastly, there's the Mighty FS opening promotion, where you can get a complimentary travel insurance when you sign up for a Mighty FS account. So that was UOB One, the best method if you have a monthly income. However, if you are someone who doesn't have a regular income, like a retiree, stay-at-home mom, or a freelance worker, don't worry. Here are a few options for you. First, Bank, which currently lets you earn 2.88% interest per annum. The good thing is that, unlike most banks which credit their interest on a monthly basis, Bank credits the interest daily. And the best part, there's no minimum deposit required, no salary crediting, and no minimum spending needed. So it's suitable for everyone. However, the downside is that the 2.88% interest is only valid till 31st December 2023. After that, the interest will be reduced to 2.5%, which in that case, GSS 2.68% interest would be more attractive instead. Second option, if you are willing to take small risks, you can also consider money market funds, which are basically funds that invest in short-term debt products, cash, and cash equivalents to give you a return that's comparable to bank savings deposits rates. For example, the Fullerton SGD Cash Fund is currently giving around 3.87% 7-day annualized yield, which is actually almost on par with the rate that you can get from UOB One. The good thing about the Fullerton SGD Cash Fund is that starting from February 2024, it is going to start investing in Singapore T-bills, which means that its risk will be even lower. You can find money market funds on various investment platforms such as Webull and other trading apps. The good thing about money market funds is that it's very liquid, as you are able to withdraw and get back your money within a few business days. And if you want to invest that money, the brokers will also let you use the money to immediately buy stocks. However, just take note that as with all other investments, there are also downsides to money market funds. One, the returns are not fixed and will fluctuate every day. This means you can either get more or less depending on external economic factors that are not within your control. And 2, this is still an investment, not a savings account, yeah? So while the risk is low, there are still risks involved. Quick pause. If you are someone who's always too busy to invest or sometimes forget to invest, don't worry, because Webull has a regular savings plan feature. With it, you can now invest automatically over a certain period. To use it, you can open up your favorite stock, tap on the 3 dots on the bottom right, then tap on Regular Savings Plan. You can start investing with as little as 5 USD or 10 SGD. Webull even lets you deduct the funds directly from your bank account, thereby saving you the hassle of manually transferring the money over. After that, you have the option of automatically investing every day all the way to every month. Or if you're unsure which stocks you should go for, you can head over to the Regular Savings Plan where you will find ETFs which tracks the Dow Jones, S&P 500 or Nasdaq, all of which may be a good starting point for you. Also, if you sign up using my link down below, fund any amount and keep the money there for 30 days, you will get to win 10 free shares worth up to 5,000 US dollars in total. Besides that, there's also a Money Boo promotion where you can earn up to 2,000 US dollars by funding more. And if you are looking for a great alternative, Webull recently launched the very first transfer deal. You can find that in the app promotion center once you sign up with my link. So if you are interested in trying out Webull, do sign up to them using my link down below. With that being said, let's get back to the video. Next, for your short to mid-term savings, such as your emergency funds, preparing for big ticket purchases, or planning for your year-end holiday or wedding expenses, here are some of the best places to park your money. First, Safe Cash Plus Guarantee currently lets you lock in an attractive 3.8% per annum with a short 3-month term. The good thing is that there's no additional requirements such as salary crediting, spending, and increasing average balance. None of that nonsense. Also, there are no fees involved, and there's also no minimum portfolio funding, which gives you the flexibility to decide how much you want to put in, and it is capital guaranteed, which means it is rather low risk. The only downside is that you will only receive your returns at the end of the 3-month term. Similarly, StashAway Simple Guaranteed also allows you to earn anywhere between 3.5% to 3.8% per annum with a lock-in period of 1, 3, 6 or 12 months. This is very similar to Safe Cash Plus Guarantee, where there's no requirements, no management fees, the rates are fixed, and the risk involved is low. Though, the one big benefit of using StashAway Simple Guarantee is that you are actually able to invest with your Supplementary Retirement Scheme or SRS money. The reason I prefer Safe Cash Plus Guarantee and StashAway Simple Guarantee instead of fixed deposits is because the issue with fixed deposits is that they usually have a rather high minimum deposit, long tenure, and lower interest rates, something which Safe and StashAway Guarantee portfolios are able to solve. Moving on, the next option is T-bills, which had a cut-off yield of 3.75% in the latest round. I know 3.75% may not seem like a lot, especially if you compare it with some of the options that I shared earlier. But the good thing about T-bills is that it is fully backed by the Singapore government, which means that it is super duper safe. One pro tip is that you can invest your CPF OA money into T-bills to earn more than just a 2.5% return. Then, when the additional interest comes back to your CPF account, it will be compounded even more to give you the magic of compounding. And finally, if you are not planning to use your money within the next 10 years, you can consider investing into Singapore Savings Bond or SSB, which can be a good choice given the high uncertainty and possibility of a recession coming. SSB is currently giving a rather high average return of 3.4% over the next 10 years. The good thing about SSB is that it is quite liquid and you can redeem the money and get it back within 1 month without any losses. Pro tip, you can check out a website called I Love SSB, which lets you project next month's SSB use and calculate whether you should swap out your old SSB for a new SSB. So those are some of the best places that you can park your year-end bonus right now. Anyway, that's all for this video. Hopefully, you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.